During a capacity building training session for horticulture farmers and SACCO managers held in Kabale, farmers from South Western Uganda decried the unfair loan terms imposed by various commercial banks, savings and credit cooperatives. Baham Tuinamasiko, a farmer and agricultural innovator from Bukinda Town Council, Ruchiga District, emphasized that most loan schemes in commercial banks and SACCOs fail to consider the seasonal nature of farming income. They expect farmers to repay the loans and interests within timeframes that do not align with their income cycle.
We have got issues in getting loans from SACCOs and commercial banks because the interest rate of those loans is always very high. And secondly, there is no any education or financial literacy which is given to farmers to get loans from the bank. So you find that a farmer goes to the bank and then he is given forms to sign. Instead of an agricultural loan, sometimes he gets a business loan, which is very hard for him to pay. So it is better maybe if SACCOs can also reach down and teach people about agricultural loans, so that farmers can really get agricultural loans which are of less interest and of maybe which are easy to be payable to the banks.
Deus Kurikayo, another farmer in Kabale, expressed concern about the high income rates prevalent in many loan schemes, which deter them from seeking financial assistance for their agricultural pursuits.
Nkeyo kutuma bagira ngo menshi ashureho amagoba buri kwezi hati nyebuza mu bwo kuhinga kwanje kaniza kumatakazeho na ya sente amagoba nakugihankaye.
John Bosco, a senior cooperative advisor at Agritera Uganda, stressed the importance of supporting farmers in accessing fair loans if Uganda's agriculture sector is to thrive and develop.
Farming in Uganda, we have 85% of it is constituted by smallholder farmers. And this 85%, only 13% are accessing finance. So we are coming to address that gap, the supply side. And how is it addressed? We have a fund from the Embassy of the Kingdom of the Netherlands through TechnoServe. We have a fund manager called the Power Capital Partners, PCP, that has the fund which these SACCOs will access through they borrow from PCP. Then they do onward lending to smallholder farmers. Why? SACCOs, most of these SACCOs, they have less money. Members demand more than what the SACCOs have. You apply for a loan, and you find, for example, people have applied for 200 million, but the SACCO is having the capacity of only 70 million. And there is always that gap always. And it is even common in these VSLOs. People meet, they mobilize money, but when it is lending time, the borrowing time, we find that what they have saved is less than what they want to borrow. So this fund will address that gap.
Solomon Kagaba, the director of Demis Consults, called upon SACCOs to play a role in connecting farmers with potential markets for their agricultural products, fostering a mutually beneficial relationship.
Mainly as a result of aspects, commodities that have no direct market for fresh products, but also those which directly target production for processing purposes like fruits and so on. In this region, basically, we are, from our research, we are seeing how farmers of Irish potatoes, farmers of cabbages, farmers of onions, farmers of tomatoes can reach their market, and we've encouraged the financial service providers, mainly the SACCOs, to support them in linking them to the market. We have seen this work for other horticulture activities elsewhere in Uganda.
Uganda's economy heavily relies on agriculture, with approximately 65% of the working population employed in this sector.